I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. Convertible Securities by Tracy Maitland is an informative guide that delves into the world of convertible securities, explaining how they work and their benefits for both investors and companies. The book starts by defining convertible securities and their unique features, such as the ability to convert to common stock and the opportunity for investors to benefit from potential share price increases. It then goes on to explain the various types of convertible securities, including convertible bonds, preferred stocks, and convertible notes, and how they differ from one another. Maitland explains the advantages of convertible securities for companies, such as the ability to raise capital at a lower cost than traditional equity or debt financing. He also explores the advantages for investors, such as the potential for higher returns than traditional bonds, while still providing some downside protection. The book also delves into the risks associated with convertible securities, such as the possibility of dilution if the company issues more shares, or the risk of the company defaulting on its debt obligations. One of the strengths of the book is that it provides real-world examples of convertible securities and how they have been used in the past. This helps readers to understand the concepts and strategies discussed in the book, and also to see how convertible securities have been successfully used in practice. Another notable aspect of the book is its accessibility. Despite being a technical subject, the book is written in a clear and straightforward manner, with minimal jargon. This makes it accessible to both novice and experienced investors alike. Overall, Convertible Securities by Tracy Maitland is a valuable resource for anyone looking to understand convertible securities and how they can be used to benefit both investors and companies. It provides a comprehensive overview of the subject matter, backed up by real-world examples and accessible writing. Whether you're an investor or a company looking to raise capital, this book is well worth a read. Convertible securities are hybrid financial instruments that possess both equity and debt characteristics. They are unique in the sense that they allow investors to convert their securities into shares of common stock in the issuing company at a predetermined price, providing them with the opportunity to benefit from potential share price increases. At the same time, convertible securities offer some downside protection, as investors still have the option to hold the securities as debt if the share price does not increase. For companies, convertible securities are an attractive financing option because they offer lower interest rates than traditional bonds, while also providing the potential for equity upside if the company performs well. This is because convertible securities typically have lower interest rates than traditional bonds due to their equity component, which reduces the company's debt burden. Additionally, by issuing convertible securities, companies can raise capital without diluting their existing shareholders' ownership stakes, as they would with traditional equity financing. Overall, convertible securities offer a unique combination of equity and debt features, making them an attractive option for both investors and companies. Investors benefit from the potential for higher returns than traditional bonds, while companies benefit from a lower cost of capital and the ability to raise funds without diluting their ownership stakes. However, it is essential to understand the risks associated with convertible securities, including the possibility of dilution and the risk of the company defaulting on its debt obligations. Convertible securities come in various forms, and each type has its own set of characteristics that make them unique. One of the most common types of convertible securities is convertible bonds, which are corporate bonds that can be converted into a predetermined number of shares of the issuing company's common stock. Another type of convertible security is convertible preferred stock, which is a type of stock that pays a fixed dividend but can be converted into a predetermined number of shares of the issuing company's common stock. Convertible preferred stock typically has less upside potential than convertible bonds, but they offer a more stable income stream. Convertible notes are another type of convertible security that is commonly used by startups and early-stage companies. These are short-term debt securities that can be converted into equity when the company raises a subsequent round of financing. Convertible notes offer investors the potential for equity upside while providing the company with a lower cost of capital in the early stages. Overall, each type of convertible security has its own set of features and benefits, and investors and companies should carefully consider which type is best suited to their particular needs. It is also important to note that the terms of convertible securities can vary widely, so it is essential to understand the specific terms and conditions of each security before investing or issuing them. Convertible securities can be a beneficial financing option for both investors and companies. For investors, convertible securities offer the potential for higher returns than traditional bonds while providing some downside protection. The convertible feature allows investors to benefit from potential share price increases without taking on the full risk associated with equity investments. If the share price does not increase, investors can still benefit from the fixed income component of the securities. For companies, convertible securities are an attractive financing option because they offer a lower cost of capital than traditional equity or debt financing. This is because convertible securities have lower interest rates than traditional bonds due to their equity component, which reduces the company's debt burden. Additionally, convertible securities allow companies to raise capital without diluting their existing shareholders' ownership stakes, which can be a concern with traditional equity financing. This is because, in the case of convertible securities, the shares are only issued if investors decide to convert their securities. Another benefit of convertible securities for companies is that they can be structured to include call options, which allow the company to repurchase the securities before conversion. This feature can be useful for companies that want to manage their capital structure or prevent dilution. However, it is important to note that convertible securities also have some drawbacks. For example, because they are a hybrid of debt and equity, they can be complex and difficult to value. Additionally, the convertible feature can create dilution concerns for existing shareholders if the company's share price increases significantly, leading to more shares being issued upon conversion. Overall, convertible securities offer benefits for both investors and companies. Investors can benefit from the potential for higher returns while providing some downside protection, while companies can benefit from a lower cost of capital and the ability to raise funds without diluting their ownership stakes. However, both parties should carefully consider the terms and conditions of convertible securities before investing or issuing them. Like any investment, convertible securities come with risks that investors and companies should consider before investing or issuing them. One of the risks associated with convertible securities is the risk of dilution. If the company issues more shares to satisfy conversion requests, the existing shareholders' ownership stakes may be diluted, which can reduce the value of their holdings. Another risk associated with convertible securities is the risk of default. If the company is unable to meet its debt obligations, investors may not receive the promised interest payments or principal payments. In this scenario, convertible securities may be converted into shares of common stock, but if the company's share price is low, the investors may not receive the full value of their investment. There are also specific risks associated with each type of convertible security. For example, convertible bonds may have call provisions that allow the company to redeem the bonds early, which can leave investors with lower returns than expected. Additionally, because convertible bonds are debt securities, they are subject to interest rate risk, which can affect their value in the secondary market. Convertible preferred stock also has unique risks, such as the risk of the company not paying the fixed dividend, which can reduce the security's attractiveness to investors. Additionally, the conversion ratio may be adjusted over time, which can affect the potential for equity upside. Convertible notes also have specific risks, such as the risk of the company not raising a subsequent round of financing, which can prevent the notes from converting into equity. Additionally, the conversion price may be subject to adjustment, which can affect the potential for equity upside. Overall, Convertible securities have risks that investors and companies should carefully consider before investing or issuing them. These risks can vary depending on the type of convertible security and the specific terms and conditions of each security. Investors and companies should conduct thorough due diligence and consult with financial professionals before making any investment decisions. One of the strengths of Convertible Securities by Tracy Maitland is that it provides real-world examples of convertible securities and how they have been used in the past. This helps readers to understand the concepts and strategies discussed in the book, and also to see how convertible securities have been successfully used in practice. For example, the book discusses how Amazon issued convertible bonds in the early 2000s, which allowed the company to raise capital while also benefiting from the potential for equity upside if its share price increased. The book also discusses how Tesla issued convertible bonds in 2014 and 2017, which helped the company raise capital while also reducing its interest expenses. The book also provides examples of how convertible securities have been used in the startup world. For example, it discusses how Dropbox and Airbnb both used convertible notes to raise capital in their early stages, which allowed them to benefit from equity upside while providing investors with a lower cost of capital. By providing these real-world examples, the book helps readers to see how convertible securities can be used in practice and the benefits and risks associated with each type of security. This can be especially helpful for investors and companies who are considering using convertible securities, but may not have much experience with them. In addition to the real-world examples, Convertible Securities also provides a comprehensive overview of the subject matter, backed up by accessible writing and minimal jargon. This makes the book suitable for both novice and experienced investors alike, and a valuable resource for anyone looking to understand convertible securities and how they can be used to benefit both investors and companies. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.